Intel Q2 2024 earnings, a horrendous result with a miss on total revenue, K, gross margin, and EPS. Intel has now announced its earnings for the second quarter of 2024, posting broadly negative results relative to the consensus expectations. Intel, Nasdaq, INTC, earnings release for the second quarter of 2024. For the 3 months that ended on the 30th of June, 2024, Intel reported $12.833 billion in non-GAAP revenue, missing consensus expectations of $12.94 billion. The following chart compares the performance of Intel's two major segments, Data Center and I/K, and Client Computing Group, CCG, with Wall Street's consensus expectations, sourced from here and here. Of course, I is the market's buzzword right now, and Intel is trying to capture this thematic tailwind. In recent weeks, the company has introduced the Xeon 6 processors to handle data center related tasks, the Gaudi 3i accelerator that is around 50% faster than NVIDIA's H100 GPUs at training generative AI models, and the new Lunar Lake chips that enable PCs to perform AI-related tasks. Even so, given the fact that Intel's KI segment missed consensus revenue expectations in Q2 2024, it seems the company has yet to truly tap into the secular AI-focused tailwind. During the quarter, the company generated $2.3 billion in cash from its operations. Its cash and cash equivalents and short-term investments now stand at around $29.273 billion. Intel has reported Q2 2024 non-GAAP gross margin of 38.7%, which is down around 1.1% on an annual basis. This is all the more striking given the fact that Intel had guided to a non-GAAP gross margin of 43.5% just last quarter. Additionally, the chipmaker has disclosed a GAAP net income of -$1,654 million versus consensus expectations of -$448.50 million. On a non-GAAP basis, the company has earned a net income of $83 million. Finally, Intel earned 2 cents in EPS, non-GAAP, missing consensus expectations of 10 cents. Intel had previously guided to a non-GAAP EPS of 10 cents while announcing its earnings for the first quarter of 2024. Here is the company's guidance for the third quarter of 2024. Intel's guidance for Q3 2024. Investors have reacted negatively to the company's latest earnings release, with the stock currently down over 10% in after-hours trading. The company not only failed to meet consensus expectations for its top-line and bottom-line metrics but also failed to deliver on the key KI segment. Moreover, its gross margin continues to worsen on a sequential basis, given the chipmaker's latest guidance. Last year, Intel laid off around 5% of its workforce. Now, as per Bloomberg's reporting, the chipmaker is purportedly preparing to lay off between 1,000 and 9,000 employees, corresponding to between 1% and 8% of its total workforce of around 110,000 employees. Meanwhile, Intel's foundry unit continues to benefit from the fierce tailwinds emanating out of the bipartisan consensus to reshore chip manufacturing in the U.S. Intel expects the unit's ongoing expansion to result in cost savings of more than $8 billion to $10 billion exiting 2025, which will allow the company to achieve a non-GAAP gross margin of around 60% and non-GAAP operating margins of around 40% by 2030.